think Endowus has helped you.
Hello.
Hello.
Oh, I mute.
I should mute, right?
Hi, good evening, everyone. Thank you for joining us today on planning for retirement and tax relief despite record inflation. It's a very long and loaded title, but I assure you today's session, the points that we're going to bring up is going to be pretty short. Yeah, so this is actually the third time I'm doing this. Previously, I was doing it with Sin Ting and another colleague, Lin Sing. And today we have another colleague, a new colleague, Nicholas, who is joining us today. Nicholas, you want to do a bit of self-introduction?
Hey guys, my name is Nick. I work as a client advisor here at Endowus. My job includes providing financial advice as well as helping clients navigate the platform to achieve their financial goals. So very excited to be here. It's also my first time, so hopefully we can learn together more about this session.
Yeah, so as a client advisor, Nicholas will be trying to ask the question from your perspective, and so please feel free to ask any questions. There's no lame question or stupid questions. Just put it on Slido, and Nick will help us on your behalf. Okay, so let's get straight into this. Okay, so just a bit of a disclaimer. Investment involves risk. We don't know your financial circumstances, so please do not treat the content today as financial advice. But if you want to reach out to Nick and the rest of the financial advisor team, please send an email through support@endowus.com, or you can drop us a call, and we'll be able to give you advice along the way. And just take a look at the disclaimers as well. I'm just pause here for a moment. Yes, so we are running some promotions for end of the year. You have some money saved up that you want to invest more. Feel free to go into endowus.com/promotions. We have quite a few promotions going on. Specifically for existing clients, I just had a chat with my marketing team, and I really fought for you guys. If you have not invested your SRS before, you are able to go and get a really special promotion. So by tomorrow 2359, if you have set up link your SRS account to the Endowus account and put in your investment goal, you will be able to get $63 off your Endowus fee for SRS investment. Right, so do that now as you hear us talk through. I really fought for you guys because it's really difficult. The promotion is supposed to end on Monday, right? So get started if you have not gotten started with SRS investing with Endowus. Right, for new signups, please scan the QR code, or I believe there's another promo link in the YouTube description. Right, you get $63 off Endowus fee when you sign up and invest with Endowus. Okay, again, Slido, please go into that. We're going to make this session today very interactive, right? There's going to be polls, there's going to be a quick Q&A, so please go into Slido. Just a quick shout out about what we do as a company, right? We help people invest better so that they live easier today and better tomorrow, right? So as a platform, we don't just provide investment solutions. We also host webinars, write articles on various topics like CPF, SRS, managing your money better, how to do financial goal planning. So do check out our content. And basically, Endowus is a one-stop stop for all of your financial needs. Right, we are the only digital wealth platform that helps you manage your private wealth as well as public pension. And in this case, when we talk about public pension, we're referring more to CPF as well as SRS. Right, so we are a fee-only wealth platform, and what that means is that we only take fees from our clients. We are not paid by any other fund managers, and that helps us be very independent in the kind of financial advice and the kind of product that we recommend you. So we truly believe that whatever financial products that we recommend you is in your best interest, is probably one of the lowest cost solutions available out there, and it will help you grow your wealth well over the long term. Right, some of our biggest investors include EDBI, Lightspeed, UBS, Samsung, Singtel, Venture Capital, as well as Process at SoftBank. Yeah, and we are one of the top-rated digital investment platforms in Singapore. We have more than 2,000 reviews, and many of our clients have great feedback about how our platform is convenient, very easy to use. They can invest their CPF and SRS, right? Some of these features are really not readily available on other platforms. Yeah, so we are talking about inflation today, right? This is something that all of us feel, right? So I'm just going to run a poll now. Would appreciate if you can join us today, right? So Nick, maybe you start off with a bit of a question. How are you actually managing your finances with the record high inflation that we're seeing nowadays?
Well, things are getting quite expensive. I think reactively, I try to spend a bit less. I'm planning for a wedding. Sheng Shi, I think you are as well. So I think cutting back on expensive meals and so on. But also realizing that if I just put my money in the bank, it will be eroding lah. So also trying to think about investments. And it just so happens that now is the year end, so maybe the SRS top up would be a good option. But for now, I think day to day, try to eat a bit cheaper. How about you, Shang Chi? What do you do?
Yeah, so like you rightfully point out, some of the expenses is not easy to cut down on, right? Like there's no way we're gonna scream on a like wedding because that's just something once in a lifetime. Once in a lifetime thing. There's no way you can cut down on it. And of course, traveling, right? They call it revenge traveling, but the way I see it is for my own mental wealth, right? It's really difficult for us to save up on money which we feel essential, right? But there are some other small sums of money that we can potentially save up on. And one of them that we are going to talk about a lot more today is on tax relief, right? So I think we are getting 13 replies from the audience. Yeah, cutting down on non-essential expenses. I think that those are very quick wins that we can really get some savings on. And yeah, definitely there are also some other small, longer term things like planning for your finances more carefully. I think Nick later on you'll be sharing more about some of the government policies that we have available. That there are some trade-offs involved, and we'll be talking through them. But if you were to use them properly, you will be able to save out a fair bit of money when it comes to income tax. Yeah, so we'll just keep the poll running. Please share your views, and yeah, definitely happy to engage more with the audience. So okay, next slide. Yeah, so when we look at inflation numbers, I think over the past 10 years or so, when I graduated and when I start working, actually inflation is a very foreign number, right? I think back then when you look at headline inflation numbers, it's only a 1 or 2% figure, right? So it's nothing really eye-catching when it comes to the headlines, right? But now, we really feel the impact of inflation, right? So for example, if you look at your Ya Kun Kaya toast, the prices are way, way, way more expensive, right? So Kaya toast with butter set, it's from 480, it's now 560, right? If you look at your McDonald's extra value meal, a filet of fish meal previously cost $5, now it's at 580 or even higher than that, right? So these are numbers that we actually see, right? Not just our Grab rides, not just our our cai peng, right? For some of you who like economic rice, but also for all across all different expenses, we see much higher spends, right? And all of this really adds up over a long period of time, right? And the main thing that I want to call out is that it's not something that we are expecting for 2022, but something that we should be expecting in 2023 and beyond, right? Our DPM Lawrence Wong as well as Prime Minister Lee Hsien Loong has pointed out that inflation is going to be sustained over a longer period of time, and the past 14 years of very low inflation is an anomaly that we should not expect in the future, right? So we are so used to low inflation, but if you look back at the history of CPI growth in Singapore, actually inflation is actually a lot higher, right? It ranges anywhere between 3% to 5%, and in the 1970s we actually see the oil crisis, we see inflation as high as 20+%. Right. Of course, I don't think the central banks are going to ever let something like that happen easily in the future. But I mean, a 4 or 5% longer term inflation rate is probably something that we can expect, especially with deglobalization, very high labor costs, higher GST. Right. So these are things that we should be expecting in 2023 and beyond. So high inflation actually makes retirement a lot more expensive, right? And you can imagine how it works, because just like how wealth can compound, right? Inflation over sustained inflation, higher inflation over a long period of time actually devalues your retirement savings more quickly, right? So over the right side, when you look at the chart, there is a chart showing how higher inflation actually decrease the value of your money, right? Comparing between 1% inflation rate as well as a 3% inflation rate, right? So you can see that, for $100 that you saved up, assuming no investment returns, right? At 1%, over 30 years, the value actually drops by 26%, right? But at a 3% inflation rate, which is perfectly fair and reasonable in this kind of environment, right? You can expect that $100 to drop to $40, right? And between that 74 and $40 is a huge difference of 24%, right? And this 24% is really the type of impact that we're going to see in our retirement savings, right? If we don't save and if we don't invest our savings, we are going to expect that our retirement is going to be a lot more costly. And this is something that, we also realize when we do an independent survey. I'm trying to understand how Singaporeans view retirement adequacy, right? So we have run, this is our second iteration of the Endowus retirement report. And last year we ran it specifically around the topic of CPF. And this year we are running it specifically around the topic of inflation. Right, and what we realize is that many respondents are actually a lot more worried about retirement adequacy now that inflation is higher, right? And you can imagine it's actually quite an interesting trend when in 2021, there was a lot of concern around the pandemic, how livelihoods are going to be affected, but actually inflation has a bigger impact on retirement adequacy. You can see that for all correspondents, last year, 37% of people are not confident about retirement adequacy, and this year it spiked up to 42%. Right, it's a significant spike for a year, and I think the people that are worst hit by this is actually people of a high income level, right? Basically, people who are in a household income of between $8,000 to $15,000, right? So these are probably many of you who are listening in today. Right, you would probably understand that, hey, you're not getting a lot of these grants that the government is giving out for GST reliefs or even for some COVID-related reliefs, and you can feel the impact of rising costs, be it through your Grab rides or be it through like the day-to-day expenses with F&B or even with your travel expenses, right? So saving nowadays is a lot more difficult for you because of higher costs, and then with the looming recession, your income, concerns around your income, whether you're going to get a good bonus this year, are also going to add more pressures when it comes to your top line as a person, right? So definitely, I think all of us here are a lot more concerned about retirement adequacy in these tough times, right? And I think something very interesting is that a lot of people are still not investing to tackle inflation, right? Only 48% of Singaporeans are investing to tackle inflation. A really interesting figure, in my opinion, right? Given how there's so many brokerages, neo brokers out there, digital investing platforms out there, robo advisors out there, right? A lot of Singaporeans are still not investing, and even if for those people who invest, they tend to favor much safer options, right? Things like SSB, things like REITs, and even fixed income products or fixed deposits. Very recently, we've seen that OCBC launched a fixed deposit solution for CPFOA investments, right? And then we also see that banks are raising interest rates for their fixed deposit products, right? But I mean, against a 7 or 8% inflation, these are not really good options for you to store your wealth for retirement, right? So we need to go and look at investment options that are actually able to beat inflation over a long run. So another interesting insight, and I would really recommend and encourage the viewers to go and check out our retirement report, is to look at what we can do with our CPF, because as a nation, we are getting richer for sure. So you can see that our total household assets is actually grown by 6.6% over the past 10 years, right? But out of all of these different assets, our CPF growth has been the fastest, 9.6% per annum compounded growth rate over the past 10 years, right? So it has been growing much more rapidly than our own savings, much more rapidly than our shares and securities and property assets as well, right? So I guess a part of it is because of many Singaporeans using the voluntary housing refund. They are doing CPF top-ups. They are earning more and they're getting more bonuses, and that's why their CPF balances have been growing rapidly, right? But with this very higher interest rate environment and also higher inflation, should we be doing more with our CPF? I think this is something that I think it's a much more pertinent issue that Singaporeans need to tackle when it comes to this kind of macro environment, right? And I think one, if you have the investment time horizon, right, investing your CPF is actually a very, very attractive options. With the market still being traded at a discount relative to start of the year, with so yeah, the options out there are actually, when it comes to investing your CPF now, is a lot more attractive. Yeah, so I'm just going to summarize some of the points that I pointed out, and I'll leave Nick to share more about SRS top-ups, CPF top-ups later on, right? So I think the first thing that we want to share with you is that you have to cut down on unnecessary expenses, right? If you have any Netflix subscription or Amazon Prime subscription that you're not using, any of the premium tech products offerings that you're not using, you should be canceling them. If you want to use household brands, go ahead. Hold off on your any big ticket items that you want to spend on, right? Next thing is to look at tax relief. Nick will share more later on. And I think it's very important to be able to manage your CPF with intention, right? I think over the past 10 years, interest rates are very low. I think it's very intuitive for anyone who has a very low risk appetite to top up their CPF, right? To do a voluntary housing refund. But now, with very attractive options out there, and also with the markets traded at a discount, right? You need to think about like, hey, if I'm going to commit this money for long term, maybe it's a good time to start investing it. Maybe it's, if I want to do a refund, maybe I want to refund and invest my CPF, right? So these are some of the thoughts that you should have, rather than just be very satisfied with whatever the CPF is giving, without thinking about OA to SA transfer, for example, without thinking about investing your CPF, right? The next thing is to really make sure that every dollar work harder, because recession is looming. The value of the dollar that you're holding on now is a lot more than in the past, where many of us actually have it easy, right? So make use of the better cheaper solutions out there, lower denomination solutions out there like Endowus, and help make your dollar work harder for you. And I think one last point I want to point out is that don't assume that investing is equivalent to going all in with the market. I think for many investors, new investors, when I talk to my friends, they have the assumption that, hey, if I were to start investing, I need to put in a sizable amount. This is something that is probably true for older Singaporeans in the past, but it's not true nowadays, right? You can start off with a much smaller denomination. You can dollar cost average into markets if you don't feel so comfortable, right? So getting started with your New Year resolution of investing, if you have not, you should start doing it now. Of course, we have some attractive promotion, and you need to invest more when you feel confident. Yeah. So with that, I'm going to just pass on to Nick. No, before that, you can go ahead and scan the QR code and learn more about the Endowus retirement report. We also have built a CPF calculator to help sort of help you project where your CPF will be in the future. How much income can you get from your CPF? So do try out those tools. They are read up on the retirement report. They are free, so you can learn more about where your wealth is going for you. Yes, and with that, I'm just going to run another poll before we start off with Nick's portion. So, what tax relief deductions are you doing this year? We have a few options out there. There's SRS, CPF top-ups, donations, and not sure about tax relief. Just gonna fill this up myself as well. Nick, what are you going to do when it comes to tax relief and deduction this year?
Tough toss up between CPF, SA, and potentially my SRS. So
Potentially your SRS.
hopefully by the time we finish this, I can have a decision.
Yeah. So interestingly, Nick and I, we were having a conversation before this webinar, and I realized that he didn't employ the $1 top up trick in the past. So his retirement age is going to be 63 years old, right? So for those of you who have not topped up your SRS by $1, you are already missing out on the being able to lock in your SRS withdrawal at an earlier age. So please, if you are listening in, you don't have a single dollar into your SRS, do it today. It's good for you. Pay $1 for an option to withdraw it earlier. Yeah. Oh, it seems like we have a huge crowd doing SRS top-ups, CPF top-ups, not so many donations, some of them. You can always go to Endowus Gives Back if you want to do some donations for tax deductions. Yeah. Okay, I think with that, I'm just going to pass the time over to Nick to share more about the different tax reliefs.
Fantastic. Thank you, Sheng Shi. So I think the big thing that we want to be thinking about is what are the different tax relief schemes available. If you're new to this, don't worry. I think my aim today is to just give a quick introduction to just understand income tax relief in Singapore before going into various ways you can qualify for them. And I think lastly, I will just explain how Endowus fits into this plan, even as you think about this topic of income tax relief. So if you look at the next slide, as the name implies, income tax relief effectively lowers the tax you have to pay for the year. And this is done by reducing your taxable income, which allows you to move from a higher tax bracket to a low one. So if you look at the top of the slide, each working individual has a tax relief cap of 80,000, which means the maximum amount you can potentially reduce your taxable income by is 80K. So the rest of the slides show you that you can qualify for these top-ups through either non-discretionary or discretionary means. And I just want to focus particularly on the discretionary portion. I mean, we can ask more questions during the Q&A, but let's just focus on the discretionary portion for now. And the three big things that we see would be the CPF and SRS. And within CPF, there's CPF top-ups for yourself, as well as CPF top-ups for your loved ones. And as the crowd favorite earlier on, SRS contributions as well. So they'll be the focus of our next slides, and I'll just quickly mention them. For CPF self top-ups, two big ideas. The first one is the CPF MA, right? So the CPF MA, or the voluntary contribution to Medisave account, VCMA in short, allows you to top up to $8,000. And in addition to that, there's also an account limit of 66,000, which is the current basic healthcare sum. So this means that you're not able to contribute to your Medisave once you hit this limit, right? And so other than the CPF MA, the next thing you can do is to top up your CPF SA. Just like the CPF MA, there's also a top-up limit of 8,000 annually, and this 8,000 will be deducted from your taxable income. Now, if you're below the age of 55 and your SA has already hit the full retirement sum, or FRS in short, which is currently at 192,000, any top-up beyond that will not entitle you to tax reliefs. Ken? So before we move on, CPF cash top-ups for yourself, two big things. Either you can do it through the CPF MA or the CPF SA. Now, moving on, other than yourselves, you're also able to top up for others, right? Especially your loved ones. So the two main categories here, the first one would be for your parents, grandparents, or in-laws. And the second one would be for your spouse or sibling. So I'll just talk about the first one first. There's no criteria to top up for your parents, grandparents, or in-laws, but there is a tax relief limit of a maximum of 8,000. But for the second category, for your spouse and siblings, there are actually some pre-qualifying criteria. So the two big criteria would be that individuals whose SA you want to top up has to earn less than 4,000 in the year before, or they must be handicapped before you're able to top up and enjoy this tax relief. So again, there's also a limit of 8,000, And so before I move on to the SRS, summarizing the next two slides, sorry, just before that. So the maximum amount of tax relief you can get from contributing to your own SA and to your loved ones is 16,000. Okay, so moving on to the next slide, SRS. So this was the crowd favorite earlier in the poll. So other than the CPF top-up, SRS or Supplementary Retirement Scheme is a voluntary savings scheme for retirement that is available to all residents of Singapore. So the main advantage of contributing funds to this is the tax relief received, right? And both Singaporeans and PRs are able to contribute up to 15,300 in their SRS accounts each year, and foreigners can contribute up to 35.7 thousand. And any sum of money that they contribute reduces their income tax in the assessment year following the year of contribution on a dollar-for-dollar basis, right? Subjected to obviously the initial cap of 80,000 on your personal income tax. So what do I mean by that? If you go to the next slide, let me give you an example. Might be a bit clearer. Let's look at the left-hand side of the column first. For illustrative purposes, let's just say you earn 160,000 and assume you make a donation of $60 and have a current total deduction and personal relief of 18,400. Your taxable income would be approximately 141,000, right? Which would bring your total tax payable to around 11,000. So this tax amount is actually a lot higher as compared to if you had topped up your SRS account, right? So now we look on the right-hand side. As a Singaporean, if for example, I topped up my own SRS account, 15,300, my total deductions would increase to 33.7 thousand instead of 18.4K. So this would reduce my taxable income to about 126,000 and will make me pay a tax of around 8,800, right? So you can clearly see that there's a cost savings of about 2.3 thousand dollars. And even if you don't earn that much, right? I think my main point is that the savings can actually be quite sizable, right? When you consider what Sheng Shi has said about inflation earlier, and when you consider that this savings is on a year-by-year basis, right? Moving on, just to some useful facts on SRS, I just wanted to highlight three main ones. The first one is that all contributions must be made by the end of this year for you to be eligible for the SRS tax relief next year, right? And the second one is that your employer can also contribute to SRS on your behalf. But I think the final one is probably the most interesting, right? You can, once you open an SRS account for Singaporeans among us tonight, myself included, Sheng Shi pointed earlier, you're able to lock in your current retirement withdrawal age, either at 62 for Sheng Shi or 63 for myself, but it's either 62 or 63, by just contributing a nominal sum of $1. Similarly, for our friends among us who are foreigners, by contributing a similar nominal sum upon your SRS opening, you can basically start your 10-year contribution count, right? And this is quite important because for foreigners, you must maintain an account for at least 10 years from the date of your first contribution, right? So why not just get started so that you can just kickstart the ball rolling, be it whether you're Singaporean or a foreigner. But I think the more interesting question is, how does the SRS withdrawal actually look like, right? So if we go to the next slide, we can actually see the withdrawal mechanics. For Singaporeans, if you begin to withdraw after reaching the retirement age, 62 or 63, 50% of the withdrawals will be tax exempt in the year of assessment following the year of withdrawal, right? So for example, if I withdraw 60,000, it'll be 50% of that. So if I withdraw 40,000, it'll be 20K will be tax-free. And so after this first withdrawal, right, regardless of the amount, no further contributions are allowed, right? Of course, the government has also provided some provisions for penalty-free withdrawals in case you want to withdraw early, such as terminal illnesses and death. But the interesting thing is, and maybe that's why the polls were so high just now, The main difference is that unlike CPF, for SRS, you're able to withdraw prior to the retirement age, right? But as most of you guys might know, you will be subjected, actually not might, you will be subjected to a penalty of 5%, and 100% of the withdrawal amount will be taxable, right? So hopefully these are just some helpful nuggets of information to help you in deciding whether you should open an SRS account. And I hope that, from what I've said earlier in the slides, especially when you add on to what Sheng Shi has already mentioned on inflation, actually any way which you can save your money, which I guess the SRS is doing, is a helpful means, right, in combating this rise in inflation, right? But I also want to encourage you guys to seriously consider investing it. So not only try to save it, but proactively think about investing it. And let me elaborate more on that. According to the Ministry of Finance, more than 20% actually, right, of SRS contributions remain in cash. Now you think actually that's not a big problem, Nick, but it actually is, right? Because if you look at the bullet points, the cash in your SRS account only earns you about 0.05% per annum, right? It's very, very low. In fact, it's almost negligible given the interest rates. So I guess most people would actually kind of lose money, right, over the long term because of inflation eroding your wealth. And here at Endowus, we actually believe that SRS funds, right, because you can only withdraw them at 62 or 63, actually do have a very, very long-term investment horizon, right? So if you're someone who has already decided or has already placed money in SRS, why not think about it? Think about investing it or putting that money into better use, right? And I guess that's what we're here for. We want to be transparent in showing you the different options that you have. And then in the next slide, I'll show you some examples. So you see in the next slide, right, from number 1 to number 5, these are just some options that you can think about, right, when thinking about investing your SRS money. And I guess the alternative, hopefully I've persuaded you, is not very plausible. 0.05 doesn't need much explanation to know that it's a losing game if you just not do anything with it, right? So points 1, 2, 3, 4, 5 are ways that you can invest. So shares, bonds, unit trust, insurance products, and deposits. And here in Endowus, actually, I just want to spend just the last 5 minutes before we go into questions, just helping people understand what we do here in Endowus, right? So you can see on point 3, unit trust, that is what our Endowus portfolios are about. And we fundamentally help our clients invest their CPF, cash, SRS, in unit trust, because we believe that diversification is actually the only free lunch that you're going to get in the world, right? So you just think about it. For points 1 and 2, shares and bonds, unless you're Warren Buffett, most probably you cannot do it in a way, you cannot make attractive returns in a way which is meaningful and consistent, right? I think the big key point that you want to take is consistency, right? Can I do it well over the long term, right? If I invest in SGF, Singapore shares or Singapore listed bonds, am I able to do it? Maybe not, right? And also, if you think about points 4 and 5, let's go at points 4 first. Insurance products, a lot of them comes at a very high cost, right? So I guess with regards to investment, there is always a risk involved. And so with a longer horizon like your SRS, we actually believe that it's actually prudent to take some risk to gain this meaningful return, right? Even though you might be risk averse. And nowadays, as you know, the big thing that we are against is advice that is not aligned with our clients. And sad to say that a lot of the insurance products that are being sold around Singapore, they are not actually to the client's best interest in terms of cost, right? And that's because regulation doesn't dictate them to be transparent about it. And the last one is, I guess, fixed deposits, which I guess everyone is smiling and looking at me like, how am I going to get out of this? It's true, I guess a fixed deposit rate has been increasing, like what Sheng Shi said earlier, even recently a few banks have been increasing fixed deposit rates. But I just want you to consider the timeline in which these fixed deposits go, right? So if you're telling me, it's only for a 6-month or 1 year horizon, it might be reasonable to put it in fixed deposits, right? But for SRS, unless you're actually planning to withdraw the sum, which I hope you guys are not, can I put my money in a place which allows me to make more than the current fixed deposit rates, right? And I'm speaking in particular to people who are risk adverse, right? You might say actually putting in the fixed deposit, I don't have to think about it. It's risk free in that sense. But actually, even with these fixed deposit rates, once you take into account the fine print of the cost, the sales charge, and so on, there is a case to say that it will become less attractive, lah. And I guess even though inflation will be a lot higher, I guess once the central banks in the US decides to not increase interest rates, other economies, and I'm sure Singapore banks would follow suit, that maybe the rates would drop, right? So here in Endowus, if we can go to the next slide, we help our clients invest in unit trusts, but we are merely advisors to the best-in-class funds that our clients can invest in. So I'm not sure how familiar you guys are with the names here, but these are some of the fund managers who help to manage our clients' money. And we are very, very proud of actually onboarding them because what we're doing here at Endowus is one big thing. We want to democratize investing for everyone, right? We don't want to just say it's for the rich. Neither do we want to say it's for gambling purposes, right? Like we're picking one stock, two stocks. We want to be invested in a diversified global portfolio. And how we do that is to leverage on the shoulders of giants, right? So you see PIMCO, the largest bond fund manager, UBS, largest wealth manager, all these companies, fund managers per se, they help to manage our clients' money, right? And what I do here at Endowus is to help align our clients' interests and to push them towards these funds based off your preferences. So if you can think about our clients' team as having two big things, two big H. One is that we hear, and the second one is that we help. And I guess from personal experience, I can really feel what Sheng Shi said when he says inflation has really increased. I'm in the midst of doing my own house now, and for some of you guys who have been doing renovations, you know that the renovation cost has increased at least 30%. And so it's time to think about where you can deploy your SRS money in a way which can make you meaningful gains in a prudent manner, right? We're not saying, like what Sheng Shi says, putting all your money inside, but if the money is going to be locked up for 20, 30, 40 years, then we believe that actually, if you're invested in a diversified portfolio, you will be able to capture some of that market returns in the long term. As we know, the markets have been quite volatile, but actually, data has shown that over the long term, once the business cycles have smoothened out, being in the market, having time in the market, will actually prove very favorable to investors. Yeah, so I think in the interest of time, we want to leave a lot of questions on the floor. I'll just point you guys to a few resources. If you scan any of these QR codes, to me, I found them very enjoyable because it's actually quite relatable to me. The first one, can you get too much in your SRS account, right? Is there a possibility and the optimal tax bracket to top up your SRS? So that's the first one. And I guess for the second one, for people who actually think, oh, actually, I just don't want to put in a place where it gives me 0.05, when Sheng Shi has already said that inflation 5-6% easily. What are some of the best SRS investment options available? Yeah. So I think with that, before we leave it to the Q&A, I'd just like to remind everyone that Sheng Shi has fought very, very hard to secure this third anniversary promotion, right? So the first one that we have for existing clients, you can enjoy $63 off. If you have not invested your SRS. And I encourage you guys to do so. And the second one would be for new signups also to enjoy $63 off. So I think we'll just keep this last slide here, and then
Yeah, we'll take the Q&A.
we'll take the Q&A.
Yeah. So I'm just gonna let Nick take a break while I answer some of the questions. So Nick, if you can just take a
Yeah, no worries.
check out the questions. I'm just reading off my phone on the Slido questions. Yeah. I've seen quite a few interesting ones. I'm gonna group similar questions together and I'm gonna just answer them. So I think Jane, as well as one of the top voted question, they talk about how can I look at liquidity versus locking up my money for a longer term, such as SRS or even CPF top up. So Jane specifically asked us how we address liquidity. So it's a very, very tricky problem, and it really, end of the day, depends on how much cash you have at hand. What are your short-term plans when it comes to your financial needs, right? So for example, myself, I have my wedding plans. I have also plans to renovate my own room because my wife is going to move in. So all of these costs are something that I have to properly plan for and account for before I think about a longer term commitment like SRS top up or CPF top ups, right? And similarly for Nick, he also has to think through like, hey, I need to set aside some of my money for his house, for his wedding again, before he thinks about SRS top up or CPF top up, right? So I don't think there's an easy way out of this, right? Rather other than for each of us as individuals to think through what are our financial needs over the next 1 or 2 years, and make sure that we have enough liquidity, in our bank accounts to be able to pay for our wedding, houses, renovation, etc., right? So it's a very individual decision, and I would recommend you to go through the process to think through it, list it down, talk to your partner, talk to your family, and figure out what works best for you.
Maybe I can just add a bit. I think the best thing to do would be, just to open an account with us, and then actually schedule a 15-minute call, right? I think like what we said here, we here at the clients team, we actually actually communicate to clients on a daily basis, and I guess part of the reason why it's so hard to decipher like what Sheng Shi says is because everyone has different needs and preferences. But as an overall principle, just to summarize what Sheng Shi has said, think about what you do need in the immediate term first, right? Because we want people to be prudent at the end of the day. And the best way to do it would be to obviously talk to your loved ones about it, but also maybe once you've opened an account with us, drop us a call. We can provide the link to you to schedule a 15-minute call with us so that you can just talk to different people to understand it.
Yeah, maybe I also want to add in one more point, right? Like when Nick and I present and we share about the different top-up limits, I think we have to be very mindful that these are top-up limits for tax relief, right? When you talk about $8,000, $16,000, $15,300, this is the max that you can go for when it comes to top-up, right? Please feel free to top up a more reasonable amount for yourself. It could be $1,000, it could be $500. And you will still be enjoying tax relief for it, right? So do an amount that is right for you. Don't have to go all into your CPF or SRS when your finances are a bit tight. Yeah, so do explore that option. Okay, I'm just going to go down the list.
Maybe I can answer this second one.
Okay.
The question is, does it make sense to have CPF as a bond allocation in one's portfolio? I think it really depends. And I think the main thing that will help determine it is your risk tolerance, right? So as you know, we are the first company that allows, first financial technology platform that allows our clients to invest their CPF money. But what we do here is, before we even think about whether the CPF is part of your core bond portfolio, we get them to think about their risk tolerance, right? So if someone very, very risk adverse, and you choose our advice portfolio, we wouldn't actually put any equity funds inside, right? Depending on your risk tolerance. So for example, if you are someone very, very risk adverse, then actually the portfolio recommended to you would actually contribute to part of your total bond portfolio, right? But if you're someone who take some risk, then you can imagine it as a mixture of both equities and bonds. But I would like to think that, just like what Sheng Shi has said earlier, it's better to think of your CPF portfolio from a pure investment perspective, right? So actually, as much as it's locked up, not like SRS, you're still able to access the markets, especially with Endowus, right? So be it whether it's bonds or equities, I think this is very, very important. So thank you for your questions.
Yeah.
Yeah.
Nick, actually, maybe I can add on to that question. Yeah. So again, just to maybe set a bit of context about how people think about CPF bond portfolio. In the past 10 plus years, right, interest rates are very low, right? Fixed deposit rates are like below 1%. And a lot of people, when they look at CPF, it's very stable. It's giving a very attractive risk-free rate, risk-free interest rate. They tend to look at it as a part, more like acting somewhat like a bond, right? But if you look at the environment now where fixed deposits are 3+%, 4%, right? Look at fixed income funds are doing 5%, 6% yield easily, right? Does it make sense to think of CPF as a bond? I would say no. It actually acts more like cash than bond, right? Because you get in terms of like real returns, you're actually getting negative returns. Yes, it's risk-free, but it's not giving you a return that's more like a fixed income product, right? So I think the urgency for me, when I look at CPF now, the urgency to invest or do more of it is a lot higher, right? I would actually love for the government to be able to somehow revise the benchmark rate so that, CPF interest rate, the base interest rates are actually a bit higher. And it's quite unfortunate that, it's stuck at 2.5% or 4%. Yeah, so I would say that, especially for folks with, who have not used CPF for housing, you have a huge balance of CPF lying in your OA. Think about, managing it in a more thoughtful manner where you can grow it faster for retirement, especially if we have a longer investment horizon, right? So those are just some thoughts that I would like to leave you with.
Maybe I'll take this question. How should we plan our SRS contributions given the 10-year withdrawal period? How will you do it, since you got on earlier?
Yeah, so I think it's a pretty complicated. It can be a pretty complicated answer, but I think for most people actually, it's more important for you to contribute at a reasonable tax bracket, right? So I think anywhere above 7%, 11.5% tax bracket, you can contribute more. You can contribute into the SRS account, right? But please do not consider SRS contributions if you're at a very low tax bracket, because the whole purpose of SRS is to reduce your taxable income, right? So I don't think there is anything. I guess the question our viewer has over here is more of like, would I have too much in my SRS if I were to contribute too much, right? And I would really encourage you to read the article that I was sharing just now. So it's the first QR code, right? Take a read about it on it. It's actually pretty interesting. Gives a pretty quantitative view on it. And I would say that for most cases, you would be able to. It should make sense, especially if you're above the 7% tax bracket. And for many of us, later on when we have our children, when we qualify for other income tax relief, we actually wouldn't want to contribute our SRS, and that would also sort of like reduce our SRS contribution and total SRS balance by a fair bit. So yep, do take a read on that. And there's an easy question that I'll just take first. Yeah. Someone was asking, whether if they were to contribute SRS early at the beginning of the year, can they invest the amount, and whether this would affect the tax deduction? No. So it wouldn't affect, because once you contribute, IRAS would already have received the information from the SRS agent bank, and you would already qualify for the tax deduction. So tax relief actually. So don't worry about that. Yeah. Okay, one more question I see that is addressed to me. What do you think of CPF OA into fixed deposit? So if I'm not wrong, OCBC has just released a product for fixed deposit for CPF. I think it is at 3.5%, 3.4 or 3.4% interest rate. It's attractive. But I also want to share with the audience here that there are actually a lot of other alternatives even if you want to take a bit less risk, right? So bond funds are actually yielding pretty decent returns, and there's no locked in as well, right? The problem with fixed deposits is that once you commit to that 6-month time frame, right, you would have to stick to that option, and you wouldn't be able to enjoy exploring other options available that may be yielding higher, right? But when it comes to bond funds, there's a mechanism inside it where you are still able to potentially get a higher yield. And when we talk about CPF investings, I think a lot of people, they have the view that they're going to go 100% equity, but nowadays with interest rate much higher, actually bond funds are something that you can consider even if you are a bit risk averse. So do consider that. Yeah. And okay, very quick one. New iShares funds, are they a good replacement for IWDA and EIMI? So maybe for the wider audience, these two ticker symbols are actually UCITS ETFs that are listed on the London Stock Exchange. They are the equivalent of the MSCI World Index. They replicate the MSCI World Index Fund as well as the Emerging Market Fund. Yep. Are they a good replacement? Yes, because they kind of replicate the same index, right? But I would say that in some sense, there are some other benefits, such as being denominated in Sing dollars. You are able to invest in fractionalized units up to $1 compared to buying through a brokerage. So there are some benefits with it. So yeah, definitely more than a good replacement, I would say.
Yeah. Maybe I'll take the next one. What is your advice for fixed income instruments for retirees? Does the US bond ETF of like offer by Vanguard suitable? If yes, how to deal with 30% tax? Well, we love these kind of questions because we do think that fixed income is actually very, very good for retirees, right? If you need a stable stream of income. And that is why at the start of the year, we launched our income portfolios, right? Designed to actually distribute the dividends out to our retirees or people who would like to use the dividends for their daily monthly purposes. And the main difference is that, as Dan pointed out rightly, they do have to pay. If you buy a normal US bond ETF, you have to deal with the 30% tax. But because our funds on our Endowus platform, they're all UCITS funds, so you would not have to be subjected to this 30%. So then, thank you for your question. We definitely do think that it's very, very important for retirees to have a stable stream of income. And we are very, very proud to actually launch this income portfolio, because you can start, for as low as $1,000 to invest in these funds in actually a portfolio, right? Maybe a US bond is still quite risky based off the risk, but in the portfolio, diversified, very stable. And the best thing is, to your question, whereas for the ETF, you would have to pay a 30% dividend tax when you sell it or when you actually receive the dividends. That is not applicable, right, for the funds on our Endowus platform.
Yeah, maybe just one more point. I think for retirees, it's also very, very important to make sure that you don't have any foreign currency exposure, right? The bond funds that you buy on Endowus, I think most of them are Sing dollar hedged. Right. So this means that whether you're buying an emerging market bond fund or whether you're buying a US bond fund, you take zero currency exposure, right? And you would be able. So in case something happens to, let's say, the US, where suddenly there's a very big depreciation of the currency, or even the emerging markets, when there's a huge depreciation of the currency against Sing dollar, right? And that Sing dollar is actually a very, very strong currency, right? The government would use monetary exchange rate policy to go and cut down on inflation, right? So with our Sing dollar hedge bond funds, you are actually able to hedge some of your, not be exposed to foreign currency risk, and just invest with lower volatility. Yep. So that's one more thing that I will add.
Maybe I just answer a question. What is the minimum investment for SRS? So for across all our funding sources, cash, SRS, CPF, the minimum investment is $1,000, and we feel that actually that is very, very manageable for our investors and our clients to get access to a diversified portfolio. Do you want to address the questions that Jane has?
Yeah, something about macroeconomies and whether how things are when the markets change, right? So actually, Jane, I don't feel that I have a slightly different view from you. So I there are always many different business cycles, interest rate cycles, and what happens is that the markets fluctuate all the time, right? And as human beings, as emotional beings, we tend to have a very strong recency bias when we look at the news, and it always feels like this is unprecedented. Things are going to be terrible in the future, right? But what we believe is that if we were to stay consistent in our investment approach, you know things would the markets would do its work, and we will be able to get a fair return for the money that we put at risk. And you can also already see, like, if you were to look back in the past, where we have the Lehman Brothers crisis, we have the Brexit, we have all the oil crisis in the 1970s. There would definitely be volatility across 1 year, even for some period, a 10-year period for the US lost decade. But if you were to really invest in a very thoughtful and careful manner, meaning to say you focus on being low cost, you focus on global diversification, then you'll be set for success over a long period of time, right? And I will say that when it comes to SRS investment, when you have a longer, not just SRS investment, but for CPF investments, right? When you have a much longer investment horizon, and you're not using money that you feel that you might be paying for, let's say, a house or something, you tend to exhibit better investment behavior, right? You would check your brokerage account or your Endowus account less. You're less likely to withdraw or sell at a panic, and then you are also more likely to exhibit good investment behavior, right? So this is something that we've seen from our clients. Many of them, some of them might have paused their cash investment RSPs, but actually most of them have carried on their CPF investment RSPs. So definitely, I have a very different view when it comes to whether things are different this time around. So I hope you can consider my perspective as
And
well.
I think to another of Jane's question for Endowus' strategy moving forward, that the past 10 or 20 years, of investing may not work the way it has for the past decade. I think we at Endowus here believe actually in not timing the market, but time in the market, right? Because who is to say in the short term how markets will do? But data has shown that over the long term, it has always rebounded and gone stronger. And lastly, on Jane's question on liquidity, we're not saying that people shouldn't plan for rainy days, but what we're saying is that if after planning for their very, very short-term goals and their emergency funds, if they do actually have some remaining money, we actually here at Endowus, we would really, really want them to consider whether they can be investing in it because of, like what Sheng Shi says, the high inflation. And if you have already topped up your CPF for some tax relief, then also because of that 0.05% a year, which is negligible, can we do better, right? In a way which offers our clients the best funds at a low cost, and also funds which can make meaningful return over the long term. Yeah.
Yeah, I just spotted a question on YouTube. Thank you, Kenneth Shah. You're asking whether you are eligible for the promo after you have done the SRS top up. Based on the limited information that you shared, I think you are eligible. So yeah, you can feel free to reach out to my colleagues at support@endowus.com if you have any questions. Yeah. So just to share on that.
So the next
Very quickly, I
yep.
see one. Does investing or SRS means you are withdrawing the money? No, not at all. Or else I would also I also be at fault at withdrawing my money and having issues with topping up in the future. So, as someone who has done the top up and invested, no such
problem with
problem. No problem. Yeah. Okay, I think I see there's still a lot of questions. Thank you everyone for being so engaged. I'm just gonna maybe answer
Answer a few more.
a
Yeah.
few more. Yeah, I'm gonna take one from JK. He's asking whether he should DCA over 6 months or 12 months and what portfolio for such a long time horizon. I mean it's a very difficult question because when we choose between invest effectively when you DCA over a longer period of time, you are sort of like assuming that the market will go lower, right? And then you're going to be able to buy cheap later on, right? So I don't think there's a clear cut answer because obviously neither Nick nor I know where the market is going to go in the next 6 or 12 months, right? There's definitely a bit of uncertainty there with inflation now seemingly lower, going to slow down from the US side, and then maybe the central banks are going to slow down in terms of their interest rate hikes, right? So there's definitely some uncertainty there, but I would recommend you to focus on the bigger picture, right? It's $15,300. You're going to invest more in the future. It's going to be held over a longer period of time if I were to assume that you are of a younger age. And therefore it's not really critical whether you are spreading it out across 6 months or 12 months, right? I would say do whatever you're comfortable with, stick to the plan, and don't look at your account too much, right? So make a decision, follow through it, and be glad that you make a decision, because I think many of us, we procrastinate, we drag on with these kind of difficult decisions, and sometimes it's just that we need to have money in the market, right? So do consider that perspective.
Okay, let's take a few more questions. Quick fire round, Sheng Shi. What if the 15,300 doesn't take me to a lower income bracket? What we say in 15 seconds?
No, it doesn't matter, because even let's say if you're in a 22% tax bracket or the 11.5% bracket, or straddling between the two, just squarely inside the 15% tax bracket, you are saving 15% of whatever you top up, right? So just go ahead. I don't quite understand the logic behind trying to lower your income tax bracket. Just save as much tax as you can. I think that's the only logical and utilitarian thing to do. Yeah.
What is the difference between investing in Endowus using SA and OA? Here at Endowus, we only allow clients to invest their OA because we think that SA's rate of return of 4% risk-free is very good. So like what we mentioned just now, you can top up your SA, and then with regards to any other spare cash you have in your OA, you can be investing in it. And there are some questions that are slightly more technical in terms of clients who are already Endowus account holders have already invested but want to diversify their investment, right? I think that is what I do here at the clients team. And actually, just to close off on my end, we would really, really appreciate if people with outstanding questions actually booked an appointment with us, a 15-minute call, because we love to hear and help our clients, right? I think one thing that we're very proud of is that as we scale, we don't outsource our support network to, I don't know, some random people from other countries, but we realize that actually investment is a deeply personal thing, right? I mean, it's very sensitive. It's your own hard-earned money, and for all the technical questions on what you should then do with your money if you have this lump sum, we would love to advise you. It would be even better if you have an Endowus account, because we can also follow through and show you how that might work. But Sheng Shi, maybe you want to take one last question or last two questions?
Yeah. There's another question from JK, like why Endowus SRS option rather than competitor name SRS option? How can I make a decision? So when it comes to SRS investment options, I dare say out of all the robo advisors, we do have the most. Actually, out of any platform, we have the widest option available, right? You can invest in short duration bond funds or money market funds through CashSmart. You can pick your own funds through Endowus FundSmart. There are also a bunch of advice portfolios if you choose to rely on our investment office with their expertise, right? And back to investment expertise, I want to highlight that we have a very, very different investment philosophy compared to our competitors, right? I think many of them, they have a view of the market, and they are very happy to express their view of the market through overweighing certain sectors, overweighing certain geographies. So in 2021, it could be China tech will do very well. in 2022, it could be that, oh, we need to be a bit more risk averse. Let's buy more Australia index instead, right? So that kind of active allocation, we feel it's best left to fund managers who have years of track record and have a really developed team to go and do the analysis and are able to hold themselves accountable for it, right? As a company, we believe the most important thing is, as what Nick pointed out, to help and to advise our clients rather than to make more speculative bets on regions and markets and geographies, right? We care about giving access to better fund products, and that's why we are in CPF, and so many of our competitors are not in CPF. They are not in SRS as well. So I think that's the main differentiating factor of Endowus. We care a lot about good access to products when there is no one, literally no players trying to improve the scene, and then also for to help and advise our clients. So I think with that, I will just close off today's session. For those of you who are new to Endowus, please scan the QR code, have a think about it. For those existing clients, please get started on the SRS. I really fought for you guys to have this promotion on. We had a long 30-minute discussion with the marketing team to keep this alive for you guys until tomorrow, 2359. Some of it's going to be a bit of a trouble for the client experience team, for like Nick as well. So please get started on your SRS account.
I'll just say one more thing. I think for all those unanswered questions, I think sorry if we aren't able to answer them. I understand maybe your frustration, but if you could either schedule a 15-minute call with us, you can just go to endowus.com/support or write into us, right? We'll be more than willing to answer your questions. And we just want you to know that in times of market volatility, Endowus is always here to hear and hopefully to help, right? And if we can't help, we hopefully can point you to various other options if there is a better option that we have. Yeah.
Yes, with that, thank you very much for all the questions.
Thank you so much.
Yeah, have a great evening ahead.
Have a great evening. See you guys.